Yeah, see with Carver, exactly the same pattern on like the push up over a few days and then the bell curve at the top and then it comes back to new lows. I'm just kind of saying don't get in at 40s or 50s, 60s. There's probably a better opportunity, lower to get into. So like a few weeks or a couple of months later.
I don't trade IPOs typically the first day, except what I said about Facebook. That was kind of a historic IPO that seemed worth, like Trader Life said, just a bit of a gamble. For historic purposes, tell my kids someday, that type of thing. Yeah. But after a year or so, year and a half, sometimes there are opportunities to get into an IPO. It's still an IPO, but not the first day. That can be to think about as well. If you are interested in a company for whatever reason, then you do have some room on the left side that you could consider, but it's not quite as risky as, like you said, the first day.
IPO calendar at stockanalysis.com. Like I said, you can Google IPO calendar and you'll find plenty of them. But this week, TWG, June, IBTA, these are the ones that are around. So the first thing I would look at on the calendar, what is the amount of shares we're talking here? The offering is kind of 2 million as it's starting out with. That is tiny. 12 million on this one. The rest are 2 million. If we go in and have a look at Top Wealth Group holdings, there is a market cap of 116 million, revenue of 11 million. So you can see they've got, that's what they're bringing in. Their net income is 2. So they're burning quite a bit of cash there. The difference between 2 and 11. Down here, we'll tell you a little bit about the company, what industry it's in. So this is luxury goods in consumer discretionary, and it has 12 employees. That is not something that I would be interested in. That is not necessarily what I'm looking for if I'm getting involved in an IPO. I don't think there's really anything I like on the what's coming. So here's one we've done on the stream a couple of weeks back, which is Reddit. Okay, so if we look at Reddit, it's got a 6.5 billion market cap with revenue of 804 million, net income of minus 90. So again, what it's doing with its revenue, I'm not sure there. It could be in an investment phase. You don't really know what could be going on there. Again, a little bit about Reddit if you didn't know. Internet and content and information and communication services. It has 2,000 employees. That's probably more something I'd be more interested in. But regardless of that, if you're looking through these as to what's coming up this week, so if we kind of went back to calendar, so the first thing I'd really do is check the sector. If they're just doing 2 million shares, not something I kind of really like to see. I also don't like to see kind of shell companies. So they're just creating a shell of a company to kind of do something else and they're issuing 2 million shares. All of these are very woolly reasons to kind of get involved in a stock. Again, another one here with 23 employees, 63 million market cap. That's just generally 10 times its revenue. Its net income is actually 283,000 here. So again, it's not something I'd be very interested in. What I would do is look at the sector. So if I'm interested in one of the stocks, you can screen for what you want to see. So if this is an IPO screener here, down here, right? So an IPO screener, this is all of the stocks that are coming up. There's 20 rows of this. See, these are the shell companies that I'm saying I would avoid straight off. I would be looking for something. Biotechs obviously be quite wary of in any case. Just the biotech kind of model is in my opinion a little bit shady, but listen, they do go to the moon sometimes. They get pumped and dumped. That's biotech is pretty much what we play every day, which is why I kind of have the bias for a short side. But looking at these, you can filter them out. You can add your filters in. So you can say, like, I'm only interested if I've got I want to look at the market cap. I want to look at the employees, not necessarily fussed about the dates and that, but let's just go with that for the moment. So I want a market cap of certainly over 300 million. If I went over $1 billion, it's going to give me 6 out of the 18 pages of the stock that we had, and these are in IT, advertising, finance, infrastructure ops, capital markets, and then obviously I'd ignore the shell company. If I'm looking at information technology or advertising, have a look at its sector, which is technology and IT services. Now, if this is coming up on the calendar and it is going to IPO this week or perhaps even next week, then I'm going to flick over to the heat map, and I'm going to have it. There's two ways of doing this. You can have a look at the heat map on finviz.com, and you can have a look around and find the IT sector around here, or you can flick over here groups, and it will give you kind of the 1 day performance, the 1 day performance, the 1 week, the 1 month, and it will give you an idea of the stock that is being IPO'd that's heavily down on the, you'd be looking at kind of like the day and the week and potentially the month. If you're giving it half a chance because it's an IPO, you could push it out as far as a month performance to see how it could challenge. It's not really going to override, to the upside, a 3-month down performance, right? It's just across its actual sector. So I'll be looking to see if the stock that's going to be IPO'd, is it positive on the day, week, and month as the sector overall? So it's going into a sector that is going to welcome it with upside. So that's what I would kind of look for. I'd be looking for anything up to 300 million or preferably above a billion. Then I'd be looking for employees kind of definitely over the 100 mark, and that's going to whittle it down like completely. For a good IPO, I am looking for it to be in a strong sector, have an employee count at least above 100, be over 300 million in market cap, and pretty much that's going to whittle out most of the noise for you. And then all I'll say before we go into it tomorrow, I think we're going to look at some of the, how we trade these on day one, because for this, there is there isn't any looking left, right? So there isn't any left on a day one IPO when it goes. So it's okay. It comes back to that question: is what do you do if you are, in a stock that's either a new highs and there's nothing to the left, or it's an IPO and there's nothing to the left? How do we go about trading that? The only other thing that I kind of really notice on IPOs, in the most part, like if you take all of them in that list over the upcoming week, and that is that they kind of have a very similar pattern to a small cap. They can go up for a bit and then they kind of bell curve and then they kind of come back down to where they come from or much lower. So it's kind of, how do we get from this starting point? What is it we do? Because we can't look left and see anything. How do we take advantage of these pushes? So we'll take a look at that tomorrow. But for the moment, that's what I would do to try and find the better IPOs.
Scott, I don't trade IPOs typically the first day, except what I said about Facebook. That was kind of a historic IPO that seemed, worth, like Trader Life said, just a bit of a gamble for historic purposes, to tell my kids someday, that type of thing. Yeah. But after a year or so, year and a half, sometimes there are opportunities to get into an IPO. It's still an IPO, but not the first day. That can be something to think about as well. If you are interested in a company for whatever reason, then you do have some room on the left side that you could consider, but it's not quite as risky as, like you said, the first day. Do you have Cava in?
Cava, as in the Spanish?
It's a restaurant.
Sparkling wine. Oh, Cava. No.
Yes, CAVA. It's a new IPO. Same with Chipotle. And that, back when Chipotle was an IPO, was a pretty hot stock. So sometimes there are, after a bit, they can be more interesting when you have some chart history. Yeah, no. So those that have like the bit like Reddit, for example, would be one that I would look at on a longer term basis. Even if we look at, I think Reddit made a comeback. What did Reddit? So RDDT, for example. Yeah. So in that first instance, that's what I'm kind of talking about, right? Is it can come back to the right. Reddit can come back this potentially once the in's back in it, but on the IPO date and days, a lot of them follow this kind of small cap bell curve that you get, like literally up, then a little bit of a bell curve at the top, and then down from there. So, and the other one was MNDR that we was looking at. It's just coming into its benchmark now, but again, we're seeing that kind of push up for a day, 2 or 3. Are we going to see that bell curve at the top and then see it come back and rest down at about $10? Yeah, if you hadn't, like Chipotle, for example, itself was a great stock to get into, but it's just
not always on day one can you expect it to go to the moon, you know. See with Carver, exactly the same pattern on like the push up over a few days and then the bell curve at the top, and then it comes back to new lows. I'm just kind of saying, don't get in at 40s or 50s, 60s. There's probably a better opportunity, you know, lower to get into. So like a few weeks or a couple of months later.